Global events are weighing down on the bond market. That'll be our topic for this morning's Backstage Pass. Good morning, I'm James Lopez, President at HomeFi Corporation. First, I hope everyone had a nice, safe, relaxing Memorial Day weekend. It was a great weekend. Here on the Gulf Coast we had wonderful weather, and I hope everybody had a wonderful weekend. While the United States was celebrating Memorial Day as a holiday, around the world there was some unfriendly events that took place over the past 48 hours. Unfriendly to mortgage bonds, that is, in the bond market specifically. Right now the mortgage bonds are down this morning 39 basis points. The 10-year yield is up 3 basis points right now. And here are a few key players of what's been going on around the world over the past 48 hours. Number one, there's been improvement in factory activity in China because of the easing of COVID restrictions there in China. Number two, oil prices surged over the weekend. Number three, Eurozone inflation hit a record high. And number four, Chinese stocks hit a 5-week high. So all of those things over the past 48 hours while the bond markets have been closed, when mortgage bonds and the bond market opened this morning, kind of put some pressure on mortgage bonds. And so we saw the 10-year yield actually lift all the way up to 6 basis points. It's kind of receded a little bit, and mortgage bonds were down as much as 45 basis points. That's kind of receded a little bit as well. Now, we also did expect what's called a sideways drift or a sideways shift in the market. And basically what that means is that a sideways drift is where security prices are trading within a specific technical range but aren't trending in a certain direction, right? And so with that technical range that we always talk about is support and resistance, a floor of support and a ceiling of resistance. And so mortgage bonds and the 10-year yield are trading within their technical ranges right now. The mortgage bond technical range, we're looking at the 4.5% coupon. So the technical range, the ceiling is at 102.15 and the floor is at 101.51. So there's a lot of room in there for the prices to trade without actually starting to set a trend. This morning, mortgage bonds already tested floor of support and have come back up, like I said. And 10-year yield also tested its resistance, its ceiling, and it's come back down. So we're in a little bit of a sideways market, which can have some price volatility in the sideways market, and that's kind of what was expected. And again, just the events that occurred overseas kind of put a little bit more pressure on the bond market this morning, and so we saw a little bit more of a trade towards the bottom of that technical range on the mortgage bond. Now, what that means for mortgage rates this morning: mortgage rates are going to open worse than where they were at close of business on Friday. And that rate sheet, typically whenever you have a rate sheet that closes on a business day or working day, and then there's a holiday, that rate sheet typically for most lenders lasts through the weekend and into the holiday. And so whatever the rates were on that rate sheet at the end of business on Friday, we're most likely going to be opening worse than that. Now, there's no major economic news or anything or major events that are slated to happen today. So we don't expect a lot of movement towards the bottom. Like I said, mortgage bonds already tested the floor support. So unless there is something that's really groundbreaking or earth-shattering, we should be staying within that range. And so I don't expect us to see any repricing for the worst. Although we always say there's no crystal ball and anything is possible. Now, speaking of economic news, coming out this week's got a little bit of a busy week this week for economic news. Down in the description of this video, we've listed the entire slate of economic news for the entire week. So you can go through and take a look at some of those things. But some of the big movers this week are going to be the FHFA and Case-Shiller home prices. Those are month over month and year over year home price valuations. And they're just taking a look at where home prices now versus last month versus last year. That's especially important in the real estate market. Also, we're going to have ADP National Employment Report. That's a pretty big one. We're going to have the ISM Manufacturing for May. That's a pretty big report that can move the markets. And then we're also going to have non-farm payrolls and unemployment rates coming out on Friday. Those two news pieces do have the potential to move the markets one way or another. As that news comes, we'll get it out to you. But for the meantime, that's all that we have today. If you have any questions about anything, always be sure to leave a comment, ask a question. If you're curious about sideways markets or stuff like that, ask a question. Make sure you like and subscribe. And listen, I hope you have a wonderful day, a great week. Remember, stay positive, and we will see you tomorrow.